Hey, what's going on, Profit Bulls? Should you even track your trades? That is the ultimate question. Yo, it's Tom here, so let's take a moment and talk why you should track your trades. Tracking your trades allows you to understand key stocks that you made money on or lost money on. This allows you to look into the past so you can see your previous outcomes. If you had a few red days, this will allow you to look back on the charts to see what happened that day. Why did you lose money? Was there earnings or news pending? Was there a bad day in the market overall? Did it hit support and resistance areas? Does it have a sideways movement during this period of time before? Tracking your trades allows you to monitor progress over several days to 1 year. Now I'm going to show you how I have my Excel sheet set up. Also, let me know in the comments below if you even track your trades. Hit the thumbs up, subscribe if you haven't. Until next time.
Alright, what's going on, Profit Bulls? I'm going to show you my growth plan challenge. So up here in the this area here, if you want to grow 4% a day, you're going to have to average it out to, I believe it was 20 days roughly around trading time, or 20 actual days for trading. So that would be 20%. You would put in your principal, what you start with right here. So if you click here, let's say 2,000, it will change all the numbers over here, and this would be your quota, and then you can see your positions, right? So then we have so the target is 12 months to have $17,000 from just 2,000. So from April, you're expected to start out with $0. Is pretty much your zero barrier is 2,000. May 2,600, and continue and continue and continue. Right, so when you come down here, so we're starting with, we gotta change this here, change this to 2,000. So that would push this line down. So every month you're gonna update this, and how you update that is if let's say 0 for that week. So let's say this will track weekly. Say the first week I made 500, the next week I'm down 100, the following week I'm up 600, and a fourth 600, and then the fourth week I am down I'm down 200, right? 200. That's your overall what you made for that month of April. Then you can come up to the month of April here and say 800. Come on, 800. There we go. Sorry, that is wrong. Here, then we could change this to 2,800. So now you're at $800 profit. That was my fault. And the same thing with May, June, July. So your goal for so you're up 800. So you're up more than $200 for the May time frame already, and you can see that by this position here. So we start with May. We're gonna say May. So April. So this already calculates from this up here what you made the first week, second week and third week. So it's good to know your overall percentage for the week is 29%. So let's go to the next one. We'll say, for an example, this week, let's just say this week had a fabulous week. We made 1,500 the first week, and in the second week we made just 200. Third week we made 1,000, and in the fourth week we made, let's just say 20 bucks. So your overall is 2,720. It automatically calculates down here your percent of return, and then you would come up here and do the same thing. So your overall for this month is 2,720. Enter. So 4.6%. So you made $120 more. So you're just, just barely above that line right there, which is okay. So that is this how this works here. Let's take it on to this sheet here. So, for instance, you want to buy SRNE. This is for contracts only. Um, let's say we bought it at $6, and our target sell point, let's say, is 7.50. Since we're working contracts, you can put shares in on this side. This is for options. This is for shares. Shares, we do. Let's say we bought 200 shares. Then that would be the return right here is 300. And you can also put in a date that you bought it. And the total profit is up here. So when you scroll, okay, that should have had a scroll lock on it. When I submit this, it will have a scroll lock, so when you scroll, it will stay there. So we're gonna move on. Let's say Tesla. We bought a contract that expires 06/19/20. All right, we bought it for 8.25. We bought 2 contracts for that price. So 2 contracts will equal 200 shares because 1 contract is 100, and it will show right here minus that because you haven't put this in yet. So now we sold it for $9. You made 150. Profit. This is a rough estimation for contracts because we know for a fact that the price can definitely be a lot more than that in between. Continue on. Let's say I want to buy Aurora Cannabis. We bought it at $10 because it's pretty high right now, and let's say we sold it for $15 and we bought 60 shares. So your profit is 300. So that's how this works right here. This is just this chart, or sheet 2, this chart here only just keeps track of your trades. Same with the other one. The other one is just your overall progress, what you make week by week and month by month. Month by month, and you have a graph over here that shows your average with the I don't know why my computer is being so slow right now. With your position, and this is your goal to meet. That's your goal to meet right here. Obviously, try for the best you can. So, like, let's say that this month here, you just made a continuation of 600, 350, a good week 2,000, 800. So you're at 375. Then you come up here, 3,750. It's $430. So you're still above your 3,320. And obviously, every time you buy stocks, you're going to want to use a little bit more of your position, to have a little bit more leverage when you buy these stocks or contracts. But this is an excellent tool to help you keep track of your trades. I love it a lot. And yeah. Well, that concludes this. Make sure you hit the thumbs up and subscribe if you haven't. Until next time, team. All right.